Of course. Thank you, everybody. And I was talking with Anna just before. So what I like to do and what I found is folks will have their own questions, and usually I think it's more valuable answering those and having a discussion there. But what I can do first is start off with just a brief presentation, and then we'll dive into those questions. And you know, I've got no time restraint, so happy to answer any questions you have, and we'll take it from there. Okay, so let's try. Can we share screen share?
Yeah, you should have access to screen share.
Okay, I see. Okay, I think I see. Let's try. Do you know how I switch over to that?
Do you see the screen share button at the bottom of your screen?
No.
Next.
So share screen.
Share screen. Yep, it's in green. Okay, there we go.
And then you just select which window you'd like to share.
Perfect. Okay, does everybody see that?
Yes.
Yes, we do.
Native for native, yes.
That's it. Okay. So just a quick brief history of Section 184 or HUD-184 and why it's here. And so it's here to address some concerns. The Section 184 Loan Guarantee Program was created by the Housing and Community Development Act of '92 to address the lack of mortgage lending in Indian country. So much of the land in Indian country is held in trust. Land held in trust for a tribe to be mortgaged, and land held in trust for an individual must receive approval from the BIA. Now, having said that, most of our loans are not in trust. We have a handful of them going on at any time. However, most of the time it's just on your regular fee simple land. So your regular home, anywhere in Kansas and Missouri is usually in fee simple. So some of the reasons why it's so useful is because statistically, we as Native Americans are less likely to own homes. We have a higher dropout rate, and that's also due to a lack of access to education and a higher poverty level. So some statistics there to address the concerns of why we might have such a low statistic in homeowners. But ultimately, the Section 184 is, it's really a tool, and not your only tool. The tribe itself is often one of our best resources. So, even if you are a Native American like myself that wasn't born on or live in your tribe, often tribes still have programs that can help you out. Now, I say that it ultimately depends on the tribe. So Cherokee Nation is largely in jurisdiction. So unfortunately, for folks like myself, I'm just probably a mile from the jurisdiction line. There are different benefits for folks inside and out. And most of the tribes will also have other guidelines, such as income-based programs. And in this case, if you're seeking something like down payment, it might even be credit score based and that sort of thing. So, but anyway, ultimately you're working with HUD-184 and tribes, although to be clear, and often what is mistaken a lot is people think HUD-184 is something you have to go through the tribe for, or it's presented by the tribe. That's not really the case. It's a federally backed program, so it's actually held through the Office of Native American Programs, which is in DC, under the umbrella of HUD, just like your FHA loan. Okay, so the 184 works towards helping tribal members get into a home that they can call their own. So we'll get into some benefits here in a second, but basically what you're typically looking for is a low interest rate, but also what comes with that with this program is no minimum credit score. Now that doesn't mean credit doesn't matter because credit history definitely matters. However, the program is structured in a way that the risk assessment is not so much on credit score, but on credit history. So meaning if you're a student and you haven't established credit history, maybe you don't even have a credit score, it's not going to be held against you. You can still apply and get into a home through this program with no credit score. And that's because it's manually underwritten, meaning a live human being, somebody that we work with every day, actually goes through your loan to make sure that your loan is eligible for the program. The difference being manual underwritten and automated underwritten is most programs today are all digitally, automatically underwritten. So you just put it through a machine and it comes out as approved or not, which is easy, but it doesn't, it doesn't take into account the flexibility that HUD184 might. So again, you can live on or off tribal land, and there is no maximum income limitation. And that's important because a lot of tribal programs do, and that's kind of your classic classic roadblock for a medium to upper income earner. Just you would think, okay, I just don't qualify for these programs because I make too much money. But with HUD184, that is not a roadblock. You can make $1 million in a year, and as long as you are a tribal member, you are eligible to apply. Okay, so what this loan has done is grown probably quite a bit since I've put this presentation together, but it's grown significantly, especially in the last 5 to 10 years. There's over $4 billion in loans that have gone out, and all 100% of the loans that go through are guaranteed by HUD. So that word guaranteed is a little tricky. What that means is if the loan were ever to default, this being a government loan, just like your student loans, for example, that are government student loans, they are guaranteed, meaning the money would go back to the lender. And so what that means for you is you're not necessarily guaranteed for the loan. However, if you default on making those payments, the bank is guaranteed by the government to get their money back, which means it's a lower risk loan. And that's ultimately, what makes it a little cheaper for borrowers is because, again, going back to risk assessment, if a loan is guaranteed, you're likely to get a better rate and better terms. So if you have any questions on that, we can talk about what that means later. Okay. So what to do when you start thinking about buying a home? Obviously, you want to educate yourself, and that's what you're doing right now. So congratulations, you're already your first step. So home buyer seminars, and not just things like what we're doing today, but also talk with your housing authority, talk with your maybe your credit union or a credit specialist. I refer credit folks out all the time, people that are working on their credit. Maybe they have derogatory credit. And so you can dispute it yourself, or you can hire somebody to help you, walk through that. And there's always some kind of fee involved with that, but it's usually not terrible. And it can go a long way. I've seen a lot of people very happy with credit repair services. And then also some of my favorites are just resources like podcasts and internet resources like that. Then you have your local representatives like your realtors and loan officers like myself. I think I shared this slide with the Kansas City group last time, but I really like this quote from our chief, Wilma Mankiller. I don't think anybody anywhere can talk about the future of their people or an organization without talking about education. So that is why this is so important, because ultimately you're investing in yourself, and you're investing in your family, and you're investing in your future, because as a homeowner, you're going to pass that on, whether you really do so actively or not, or passively. You're passing on that knowledge and that security of owning a home. So going from rent to mortgage, you stop paying other people's mortgage. There's predictability there. You're building something called equity, meaning the ownership over time. as you pay down your loan. You can also pass along your property to your family when you pass away, and you can borrow against your mortgage after refinances. And then there's also tax breaks, appreciation, freedom, and stability with being a homeowner. Now saying that, I don't want to frame it as that homeownership is the only way to go, because I think there's definitely value in being a renter. And I think that there's a lot of different, paths that, anybody that can benefit anybody else and what their needs are. So my point being, homeownership is not necessarily the best route for everybody. However, access to homeownership is key. And I think, there lies the value of this program, and it helps a lot of folks bridge that gap. And usually it's a lack of, not necessarily wherewithal, but education is like figuring out, okay, how do I actually get here? And what you'll find out, it's really not a terribly complicated process. Matter of fact, we're going to go through that process here in just a second. So what type of home can I buy? Here in Oklahoma, we love manufactured homes. So manufactured homes, yes. Mobile homes, which is a term that is a little squirrely, but double wides, triple wides, modular homes, and then of course your standard single family homes and new construction. You can also do duplexes, 3 and 4 plexes, although I don't see those very often, but most of the time folks are buying a single family home. And then in rural areas, we see a lot of double wides manufactured homes. So if it is a manufactured home, it has to have a foundation, has to be newer than 1976, it has to be larger than 800 square feet, and it can never be moved. So once that home gets moved, it pretty much turns into an automobile, and so it's almost impossible to finance. And that's why they come with VIN numbers, is because they start off that way. Okay, so if you're qualified for the 184, what is the benefit? Why would you go through the 184? And I'll be honest and say it's not the best fit for everybody. There's a lot of programs out there, whether it's in government loans or not. However, I will say, I'm going to say 4 times out of 5, if you have a Native American borrower, 184 is going to be your cheapest route. So most of the time, 184 is going to be the way to go. There are other programs out there that are also very, very good, such as the FHA loan, the veteran loan, the VA loan. And then usually for those top tier borrowers that have, let's say over a 750 credit score and a lot, 20% down or close to it, conventional is also very strong. But more often than not, 184 is the way to go. That's part of my job, though, is to, in any loan officer that you speak with, you want to know what your options are, because ultimately that's the best way that I can perform my job, is to give you options. And I'm not the decision maker, but what I do is lay out, exactly which directions to go, and then let you pick from there. So most of the time, Section 184 is the way to go. And you can see here in these columns, you're going to have lesser of a down payment. Your PMI, which stands for private mortgage insurance, is less. Interest rates, I will say sometimes it's less, not always. It really just depends on the situation, the credit worthiness of the borrower. And as I mentioned before, these are manually underwritten as opposed to just purely credit score and what's called automated underwriting systems. So there's your, stacked up against each other. And to recap, most of the time, HUD184 is your cheapest option for tribal members. Okay, and then I'm going to end the presentation with just a quick overview of what it actually takes to buy a home. So you start off with an application. It really shouldn't take long. It said time 20 minutes. Usually it's less than that. So Your 6 points are always going to be the same: name, social, income, and a property address, which actually, you actually don't need that anymore. It could be a to be determined. And then the size of a loan that you're needing, and how much you're wanting to put down. So that's where you start off as an application. Usually just takes us a day or so to process. A lot of folks want to know, with their credit, where are they sitting? Now, again, there is no credit score requirement here, although it always helps to have a strong credit score. So by all means, the better credit, usually the better rates and terms. And so usually what I'm seeing though is fair, something between 6 and 660. Anything below 6 usually means there's something to clean up on their credit report and some derogatory credit. That doesn't mean you're automatically disqualified, but it just means that we want to make sure there's no roadblocks in front of you that might hold you back on an application. This is an interesting one because there's so many different sources of income. Cash is always difficult when buying a home. So if you're like my grandma who keeps, cash in the house or something, you want to make sure you do something called season your income. So put that cash in a savings, keep it for at least 2 months, because everything needs to have a paper trail. So whether you're paid in pay stubs or commission or tips, you want to get that in the savings account. You want to have that paper trail. If you're self-employed, it's going to be tax returns. And then, of course, if you're your regular W-2 earner, it's just going to be your paychecks, which usually are direct deposit anyway. So those are pretty easy. Now, if you're retired or disabled, you've got Social Security income, and that's going to be direct deposit as well. Those are pretty easy to source, and definitely you can use that as income as well. Okay, and then you start with the paperwork. So the fun part of gathering your, in this case, would be your tribal ID as well as your state ID, your 2 years of taxes. So it's tax returns and W-2s and any schedules that go along with that. Your last 30 days of pay stubs and your bank statements. Those are going to be the big ones. There's always going to usually be more than that. And as you go through the process, you're going to continually have to update things like pay stubs and bank statements as they come out. But anything more than this is really a case by case. So like classic example would be, let's say you're divorced or you have a bankruptcy. Well, we're going to need to see bankruptcy pages or divorce decrees and that sort of thing. But keep in mind what they're doing is they're just making sure they have the whole picture, and ultimately it's to assess risk and make sure you're fully eligible for the program. Okay, and then once everything checks out there, you get pre-approved. You're going to receive a formal letter from the lender, and it's going to say how much you're pre-approved for, and then you can go out and start looking for homes. And all in all, at this point, you've probably spent maybe 10 minutes on application and maybe an hour gathering documents. And so you're probably now around day 2 or 3, and by now you have a pre-approval letter, start looking for homes. If you're looking for homes right now, you might know that there's a low inventory going on, and so people are finding it a lot more difficult finding a home, unfortunately, just right now. I mean, who knows how long that'll last. But eventually when you get into a home, or you find a home, I should say, you're going to start working with a title company, so they're going to be local. You're going to submit your earnest money deposit, order inspections, and schedule appraisal. Now, a realtor can help you with all this. A realtor is not required, but if you're a first-time home buyer, it's recommended. They're going to be your local go-to to help you walk through all this. And then roughly 30 days after, on a purchase, you're gonna have your move-in date where you sign all your paperwork. You put your down payment in, pick up your keys, and get your friends to help you move into your new home. So that is a very, very brief overview of that process. And I have some more information on, what that looks like if you're interested, but all in all, it takes about 30 days. And slow markets, it could be closer to 45 days. If it's a construction loan, it could be closer to 60 to 90 days. So I like to end with this quote. In Iroquois society, leaders are encouraged to remember 7 generations in the past and consider 7 generations in the future when making decisions that affect their people. And as I touched on before, when you're buying a home, and some people will see it, and if not, I like to recap and let folks know you're not just investing in yourself. What you're doing is actually creating that path forward and making it easier for not just you, but for your family or your kids and the next generations on building wealth. And it's an exciting and very cool thing. It's something that everybody should look into, and I think should make that step and invest. It's definitely helped me as I bought my first home through the HUD184 program. I've been able to help. I think by now, I'm at maybe over 500 families at this point. Most of them are Native American citizens, and most of those are going to be through the HUD184 program. So it's something we do a lot. I will say though, if you are considering HUD184, whether it's me or not, and by all means, I'm happy to answer any questions. But and please keep my contact info too. But if you choose HUD184 or any niche program, what I always recommend is speaking with somebody that does them a lot and is very familiar with it. As you'll see, these programs change quite a bit, and that's kind of the nature of government loans. Unfortunately, I shouldn't say unfortunately. I'm going to say fortunately. It's a benefit because they adapt and they grow, and that happens every year. As a matter of fact, in 2020, and I can pull up the amount that a borrower can borrow last July, so 9 months ago, increased hugely. I mean, we saw a big increase, which helped a lot of people, especially in urban areas, so just like Kansas City, because we were running into a problem where the cost of home was exceeding what these programs would allow. So if you've got a family that that needs a big home, the program was actually getting to a point where it was limiting how much you can utilize or get a loan for, regardless of your income. And so last July they made a correction, and it was big. Actually, I did I called up to Phoenix, and we did an article in the Cherokee Phoenix on it. I called up our counselor, Julia Coates, to let her know. And so it's all really exciting because ultimately it just helps everybody. Not only does it help our Cherokee citizens, both in jurisdiction and at large, but it also, it helps our tribe, and it helps the program continue, to grow and offer, offer to more people. So that'll conclude my presentation. I hope it didn't drag on too long. There's all my contact info, and by all means, always feel free to reach out, and happy to do it too. It's really no problem. And then from there, I'm happy to answer any questions. And I know one of the questions will be, and so I'll just jump on it. It's going to be Missouri. Missouri for a long time has been, let's say, on deck for expanding. And what I mean by that is, so you have Kansas City is in Kansas and Missouri. Kansas, for a long time, I don't know when actually this started, but the whole state of Kansas is eligible for the HUD-184 program. So if you're a federally recognized tribal citizen, you can utilize the program anywhere in Kansas. However, Missouri, as of today, is just in Berry, Jasper, Lawrence, and McDonald counties. So unfortunately, outside of those counties, the program just hasn't come on board. Now, inside of those 4 counties, you can get a loan up to almost 332,000, and that's a single family home. Now I say on deck because Kansas, Arkansas, and North Texas have all been kind of floating in the air, and they being the Office of Native American Programs, they want to expand into these areas, and I think it will happen. Unfortunately, I don't think COVID has helped it, but I would not be surprised if, hopefully soon, those three areas, those three regions are expanded because our not only do they have a lot of Cherokee citizens, but they also just have a lot of Native American citizens. And we saw, was it, let's see, Melissa, was it maybe 2 or 3 years ago where our very own at-large counselors, I believe it was led by Counselor Mary Baker Shaw, pushed the HUD-184 program into Arkansas. And that was really exciting to see. I mean, that was real change happening through our legislation. It was happening on a national level. So it was very cool, very exciting. And I was always really appreciative of her for doing that. And I hope to see more. And I think we will, but of course, the more people that are aware of this program and utilize it, it's just going to make it better. Okay, well, that's me. That's my presentation. I'll be happy to open it up for questions, though.
Thank you so much, Brandon. That was a really awesome presentation. I'm going to start with like a few questions that are in the chat, and then we'll take other questions from people too. So the first one's from James Lee. He says, I live in Lawrence, Kansas, and my question is about refinancing my existing loan. My credit score is about 725. How would I start the process for that? Would I need an inspection? What bank or credit union can I use? My house is about half paid off. Can I borrow 80% of its value?
Yes, okay. That's a good question. There's a lot in there. So if I miss anything, please let me know. To answer your question, can you refi with the HUD-184? Absolutely. There's usually 2 routes on a refi. There's a term refi and there's a cash out refi, meaning you're borrowing against equity in your home, which you can do up to 80%. Now, side note, 80% is traditionally pretty high. Most programs actually, no, 85%, I'm sorry. So that means you can borrow up to 85% of the appraised value of your home. And if you want to utilize a cash out for, say, rehab or consolidating debt, you can do all of that. There are some limitations. Like, for example, they only allow you up to $25,000 in cash, but there's no cap on how much you actually consolidate. But if you think about it, most programs have a cap of between 75 and 80% of what's called loan to value, meaning the value you can borrow against your home. HUD-184 is actually very flexible in this, and they go all the way up to 85%. So it's really, really neat to see. What other questions were there in that? Can you do it? Oh, how to start. So with any refi, the big question is this worth it, right? And the best way to find out if it's worth it is to submit a mortgage statement and a copy of your homeowner's insurance policy. And then we can look at the numbers and just issue a quote. And then, as I mentioned before, the best I can do is just give you your options. So ultimately, it's up to you to decide if it's worth it or not. But of course, the best thing that I can do is put some numbers together for you and then let you decide from there. So that just starts with a mortgage statement and a homeowner's insurance policy. And then that should be enough to start at least working on a quote. Did I get all those questions, Anna?
I think that you did. James, if he missed any of your questions, will you just re-put it in the chat? And I did see that Linda Day, you unmuted yourself. Do you have a question for Brandon?
Yeah, and you answered, it was in there, part of what I wanted to know. He answered it just then, so I'm good.
Okay, great. Then I will move to the next question from Jenny Wise. It says Joe and I remodel homes and would most likely purchase an older home pre-1970s here in North Kansas City and handle the updates ourselves. Would the HUD 184 program work here, or would we be able to buy an older home?
Okay, so you can definitely buy an older home. The home that I first bought was 75 years old. So absolutely. Now where it gets tricky, and I'll touch on two things, is the rehab part of it. So you can purchase and rehab a home. But there is a very particular way to do that. And so keep in mind you're going through a bank to do this. So unfortunately, unless you are licensed, insured, and we're talking builder's insurance, workers' comp, and have a ample asset, so you have a business and a history of flipping. Unless you have those, a bank is not going to let you do those rehabs. So to answer your question, yes, you can purchase an old home and you can remodel an old home. You can do both of those things. Unfortunately, what you cannot do is purchase a home where you intend on working and flipping that home. And it's because that risk is going to exceed, well, there's two reasons, because it's at that point, it really has to be a primary residence, meaning you have to live there over 6 months of the year with the intent on owning that home for at least a year. And then the second one is the liability of you doing that work. Now, I don't know, Jenny, if you have a business that, like say files taxes and has workers' comp, so I have no idea. However, that is something that will be required. Usually what folks do is contract that out. So it's finding your local builder, they're gonna write up a quote, and then when you purchase the home, you're doing a package loan, which is the case with any construction loan. You're packaging the loan of the cost of the home plus the cost of whatever rehab you're doing, lumping it into one big loan, and that's your HUD 184. It is a little more to it. It's definitely a more expensive process because it's not just a home that's turnkey. You're paying for construction costs, but we do them. I hope that answers your question, but let me know if it doesn't.
Awesome. Thank you, Brandon. The next question is from Jennifer. She says, hi, can you explain the new construction process?
Yeah, okay. So and that's getting a lot more popular, and there's different ways to do it. So what I'm seeing more and more in the last 2 years is builders are starting to build a new home and then you buy it from the builder, meaning you're buying the land and the home is a newly built home. That's a great way to do it because you're not technically doing a construction loan, you're buying a newly built home and you get to still customize it like you would a construction loan. And it ends up being a little cheaper for you. Now, the traditional way of a construction loan is it's like a 3-part package, as I was kind of referring to before. So it's a 3-part package where you're purchasing the land, the home, and the construction. Now, some people already own the land, so that part is already taken care of, and actually that'll count as your down payment. But if you have those 3 components, right, land, home, construction, you wrap them up in a package loan, and there's your HUD 184. So the process goes, you find your contractor, and you get your quote for the cost of the home and the cost of the construction. So whether it's a stick-built home, it's a modular home or manufacturer, it's always going to come down to basically those costs. Like, what does it cost to actually build a home? What is the cost of the home itself? And if you're buying land, what is the cost of the land? So once I have those 3 things, I can actually tell you what size of a loan you'll need. And then with HUD 184, it's called a single closed construction loan. meaning you finance everything together. So the loan is actually fully done and funded before you start the process of building the home. So the loan is completely done, and then you start actually construction afterwards. And it's based on a draw schedule. So if you're familiar with the construction loan, basically the contractor has a schedule that they start building that home, and they get paid out as the home is built. But that's generally speaking how a construction loan starts off and operates. And if you're interested in more information on that, I've got a ton of paperwork and marketing material on construction loans that I'd be happy to send too. So just shoot me an email and I can get that to you.
Awesome. The next question is from Bobby, and she says, what are the counties in Missouri, again, where the loans can be, or maybe where they can find that information?
Okay, yeah. I mean, you could find all of this information online, a couple places. So todaylending.com. I've also got a landing page. It's just an informational page at nativefornative.com. What else? And then the HUD, which is, that's your government entity, will have all that information as well. Now, your question was the which counties? So it's Berry, Jasper, Lawrence, and McDonald, anywhere in Kansas. So every Kansas county. And then the amount that you can loan on is the max amount is almost $332,000.
Awesome. The next question is HUD-184 loans for first-time homebuyers only? And I'd actually like to add my own question onto that. What if you've already had an FHA loan? Are you still eligible for the HUD-184 loan?
Yeah, definitely. Is it for first-time homebuyers only? No, it is not. So the rule there is you can only have one HUD-184 at a time. So if you buy your first home and it's HUD-184, you either have to refinance out of that home or sell the home before you are eligible for another HUD-184. But you do not have to be a first-time home buyer. And you do have to be, it has to be the intent of your primary residence. All right, was there any other questions?
If anybody does have any questions and they're not sure how to type in the chat, you can just unmute yourself and go ahead and ask now. Valencia, it looks like you've unmuted yourself. Do you have a question?
Yes. Does he have any realtors that he likes to work with in Kansas City, Kansas?
Oh, I don't. We're all over the country. At any point in time, I'm doing loans in Florida, in Colorado, in Washington, and California. So no, unfortunately not. I bet Melissa does though, and I think I had heard there's a realtor on the call if I'm not mistaken. What I would recommend though, if you do find a realtor that's local, ask and see if they're familiar with the HUD-184 program. And if they're not, that's okay, and we can get them some information.
Okay, thank you.
Absolutely.
And then James Lee asks, do we use local banks and credit unions for the 184 loan?
That's a
Sorry, Brandon, I accidentally just muted you. I'm sorry.
okay, that's all right. That is a really good question. So the chances of finding a local lender that specializes in HUD-184, unfortunately, is very small, and it's just because it's a niche program. So, at best, you'll probably, now, if you're in Tahlequah, yeah, you probably could, right? But the chances of finding somebody that does them very often is usually not very big. As I had mentioned before, I'm doing loans all across the country. And so we're in, with the 4 different time zones. And that just goes to show you the folks that do specialize in 184, they've got a pretty wide net just because you kind of have to be available to Native American citizens all over the country if I just specialized in, you know, one small area. It would be pretty difficult to do.
Does anybody else have any questions for Brandon?
So Brandon, we can use you here in Kansas City.
Yeah, of course. No, I'm not licensed in Missouri. I feel like I should be. maybe I'll look into that actually. Yeah, so Missouri, Arkansas, and Texas. We've had a couple back and forths with like my management team. We actually used to be licensed in Texas, but because we focus on HUD184 so much, it's difficult when an entire state is not opted into the program. So if and when ONAP, Office of Native American Programs, if and when they fully get Missouri on board, I guarantee we'll get a license in Missouri. It's hard though finding. Now here's the thing: we have partner lenders that are licensed in Missouri and can do the 184. So if you just happen to be a tribal citizen in Missouri, we can still help you, and basically just get you to the right people.
That's fantastic. Thank you so much.
Yeah, of course.
So you do have one more question. I'm not sure what they're referring to, but maybe you'd know. Can you walk us through the process, a short version?
Maybe a short sale. I think I'm going to guess they mean a short sale. And so a short sale is a home that's usually being sold by the bank and it's been foreclosed on. So they're going for a discount, and that's the benefit, right? Is you're getting a home for a discount. There's nothing wrong about, I shouldn't use the word wrong. There's nothing that doesn't allow you to get a home through 184 with a short sale, meaning there's no guideline out there that says no short sale, is what I'm trying to say. However, there's a big but at the end of that. The home has to be in move-in ready condition, else you're going to be looking at a rehab loan or construction loan like I was mentioning before. So if you find a home that's, let's say, boarded up, or you know, or maybe it's gone through a sale, like a sheriff's auction or something, chances are it's going to get scooped up by somebody that's going to pay cash for that home and then flip it. If by chance it's in like a move-in ready condition, then absolutely you can go through the HUD184 program and buy it. Most likely though, those types of short sales are going to be sold quickly to investors. Unfortunately, and not to be a Debbie Downer, but in my experience, folks that are trying to get short sale homes, usually they'll see how, you know, either bad of condition the home is, or how it's so competitive of a market, because ultimately you're competing with people that are paying cash for homes. Is what you're doing. And they see how competitive it is. They end up saying, okay, we're just going to find a home that's basically move-in ready and go that route. So in my experience, usually folks will get kind of burnt out looking for that and looking for short sales and finding a turnkey ready home. So not to say they can't do it, but realistically, it usually doesn't work out, unfortunately.
Awesome. Thanks, Brandon. This is going to be our last question, if that's okay with you, Brandon. It looks like he was actually referring to, can you walk us through the process of refinancing, not of short selling, but the short selling thing was definitely informative. So,
yeah, sure. Refi. Okay, yeah. So there's two different versions of refinancing. There's term refi, and then there's the cash out refi. I believe the gentleman before was interested in a cash out refi where you're pulling money from the equity of your home. However, if you're just simply looking to save some money and lower either your interest rate and or your monthly payment, then it's just a straight what's called term refinance. The process is the same, really. It just starts with a mortgage statement and a homeowner's insurance policy. We make sure that it's worth it for you, because again, I always go back to that same question: is this refinance worth it? Meaning, how much are you actually going to save per month? How much are you going to save for the life of the loan? So in 30 years, and as long as that makes sense for you, then we'll go through with it. Thankfully, with this program, and I want to say, government loans in general, there has to be a very clear benefit of refinancing, and that's to protect a borrower from a needless, refi. But that's the general idea. Is so you take your interest rate. Let's say you bought 2 years ago and had a 4 or 5% interest rate, and let's say today you're at a 3%, and so you're just lowering the amount of interest you pay over the life of the loan, and you're reducing your monthly payment. It takes about 30 days. You do end up paying for an appraisal. You go through the same underwriting process, just the same as if you were to purchase a home. And the only exception to that is if you're already in the HUD184, and then we do something called a streamlined refinance, where you don't have to reapply for the 184. We just simply lower your rate without going through the whole underwriting process. So it's pretty easy to do. Last year at this time, we were doing them like crazy. I was working 14-hour days doing refinances all day, every day, just because the rates had dropped. This year, it's not, unfortunately, it's not the case. But we're seeing a lot more purchases. So people are investing again. People are back to work, and so things are starting to get to normal. And the economy is getting better, which unfortunately means interest rates start to go up again, but that's how it goes.
Awesome. Thank you so much, Brandon, for being here today. It was really informative, and I'm sure that we all got a lot out of this. And then if you weren't able to be here for the whole presentation, for Brandon's whole presentation, this is recorded and it will be posted on Facebook so that you can rewatch his beginning presentation and see all the questions as well. Before we go though, we do have some like door prizes, just a couple of trivia questions. So the first trivia question is, and the prizes will be like some sort of like Cherokee swag, probably from the Cherokee Nation gift shop. So, and you can just like shout it out or type it in, whatever. Who was the first female chief of Cherokee Nation?
Wilma Mankiller.
Wilma Mankiller.
Awesome. I think that was
Jenny.
Jenny. Yeah, Jenny.
Yay!
Awesome. And then my next question is, how many stars are on the Cherokee Nation flag?
7.
7.
7. Okay. I heard everybody shouting out, so I think everybody is going to get a door prize or like, one of the prizes that we have. So if you guys want to do me a favor and just email me your updated address at kansascitycherokeecommunity@gmail.com, I will send you a cool Cherokee swag prize in the mail. And if you don't have email or something, you can type it in the chat or just send it to me on Facebook. My name's Annalise Guthrie, but just send me your address and say you came to this meeting and I will send you a prize.
Thank you.
Yeah. Oh, and in the email, say your t-shirt size if we happen to give you a t-shirt. Not saying that's what it'll be. All right. Thank you so much, everybody. Melissa, do you have anything you want to say?
Just real quick, and I hope I'm not screaming. Did you give them the Kansas City Cherokee Community at gmail.com email address?
I did, yes. Kansas City Cherokee Community, yes, at gmail.com. Kansas City Cherokee Community at gmail.com.
Well, it was great seeing everyone tonight. I really appreciate you attending. And hopefully soon we'll be able to gather in person. But in the meantime, if you need anything, please reach out to any of us. We're all volunteers. We miss seeing you. If you have any ideas for upcoming presentations, want to learn more about something, just let us know. And we appreciate y'all. Thank you, Brandon.
Thank you. Appreciate it.
Thank you,
so much,
everybody. Good to see
Brandon.
everybody. Yeah, absolutely.
Joe, Brandon,
Wado.
thank you.
Wado.
What up?